Good morning, degenerates, and welcome to another episode of Boring Crypto IO, the place where I read you the boring crypto news every morning, Monday through Friday, so you don't have to. My name is Not Important, and I'm your host. Let's do it. Ethereum supply plunges 37% on crypto exchanges post the merge upgrade. SBF and FTX fraud aided and abetted by Silvergate Bank alleges lawsuit. Binance CEO, crypto industry will probably move to non-dollar stablecoins. U.S. lawmakers and experts debate SEC's role in crypto regulation. Some not crazy stories in the news today, guys, but just interesting. So I picked a couple of them that I thought were very intriguing. There's a handful of these SEC is kind of getting pushback from Congress, saying that that's not their job to make up these kinds of laws. It's their job to enforce them. It's more Congress's job to make up laws and crypto regulation. So I found it interesting. So we're gonna read into that. Let's go ahead and look at the market. We are up today, guys. We are at 1.032 trillion. Bitcoin dominance at 41.6%. ETH at 18.5%. And a transaction with Ethereum will cost you 24 away. Bitcoin literally just started pumping. I'm not going to, right when I started this video. So I'm not going to go too much into the market. Let's actually just go straight to the chart and see what we're doing. So right before I started the video, this is a 4-hour Bitcoin on the 4-hour. Right before I started the video, we were hovering right around here. This candle took off, and then we started a new 4-hour candle, and we hit the top of my 22,738 level, and we're starting to see a little bit of rejection. Like I said yesterday, guys, I've been saying that I see us ranging in between this 21,365 up to the 22,738, and that's exactly what we're doing. So let's dissect the story we're looking at per usual. On the 4-hour, again, yesterday we did get this dump, and we came back down and touched the 21,365 perfectly with a wick and then bounce, and we've been going up ever since. And what this could potentially be on the 4-hour, this could be a mini double bottom. I mean, it's damn near fucking, excuse my language, it's damn near textbook little W pattern here for a 4-hour double bottom pattern. We have some bullish divergence, and it's playing out, as you can see. The question that I'm asking the chart right now, that I'm asking the story that I'm staring at, is can we get above this 22,738 and hold and turn it back into support? Until we do that, I'm not expecting too much. Again, what we are trying to overcome, and what I've been saying for the last few days, we are trying to overcome. Oh, what did I do? Oh, got it. Okay. We are trying to, sorry guys, we are trying to overcome the lack of any resistance or support in this cascade over here. So with these levels that we've been playing at, let me go ahead and delete this so it's not like up in our way. Sorry guys, I'm having amateur hour right now. There we go. And get rid of these. Okay, so we're trying to overcome this again all the way down here, which is the top of this little cluster, that 21,365, which is what we came down and touched, all the way back up to this next cluster at that 22,738. And I mean, we're kissing it right now, guys. I mean, we are on it, and let's see if we can flip it into support. We're bullish. We're moving up again. Until we do that, I'm not expecting anything exciting coming out of this. Let's see. Let's look at it on the 1-hour. Yeah, I mean, we just started pumping, guys. So this is the 1-hour. We're just touching it. So let's see what happens. Keep your guys' eye on that 22,738 level. If we do one of these, where we just bang on this thing, we could potentially just drop straight down. Good potential for a short. Again, not financial advice. I'm not a financial advisor, but per usual, short resistance, long support. It's not rocket science. Let's look at ETH. Ethereum on the 4-hour. Started pumping too, just a little bit. Nothing as crazy as what Bitcoin's doing right now. We are starting to see a color change in the ribbon pattern. Oh, I'm an idiot. I can't talk. But again, more bullish divergence. It's starting to play out. Again, just like Bitcoin, I'm looking up here for the 1621. Until we flip this 1621 back into support, I'm not expecting too much. But that's pretty much it. That's all I'm seeing for Ethereum. Also, now that I'm looking at chart, let me backtrack a little bit. This 1542, if we hold this, I'm feeling kind of a little bit more bullish, but let's see if it comes down, retraces it. Right here it did. We broke out. We got a retest, which is very bullish, and we can continue moving up. But then I'm looking for the 1621. Nothing new, exciting. Just watch these levels, guys. That's how I trade. And I tell you this all the time. It's nothing. I try and keep it as simple as possible. But yeah, let's bounce back to Bitcoin real quick. See what it's doing. Oh, we're above it. Bounce back to the 4-hour. Right now we're above it. Let's see if it holds. Keep your guys' eyes on the lower time frames to see what the price action is doing. Let's see a 30-minute. Let's go to the 15. See if we get a kind of a bounce off of that level, turn it into support, kind of front run this potential idea. Oh, she's going. Look at it go. Bitcoin's moving, y'all. Woo! Green candles. All right. That being said, don't FOMO. Don't get too excited. Let's see. Last time I'm going to say it. Let's see if we can flip this into support. Let's get on to the news, guys. I'll sit here all day and watch this candle run if I don't walk away from it right now. All right. News. Ethereum supply plunges 37% on crypto exchanges post the merge upgrade. I didn't hear about any of this till today. I'm kind of curious what exchange this happened on. Just weeks before the Shanghai upgrade, the decline in exchange supply is being seen as a bullish sign. ETH, the second largest cryptocurrency by market capitalization, has seen a constant decline in exchange supply over the past 6 months post-merge. The Ethereum network underwent a major upgrade in September 2022, moving from a proof-of-work to proof-of-stake network in an event called the Merge. According to on-chain data shared by crypto analytics firm Santiment, the amount of available ETH sitting on exchanges continues to fall. Since the merge, there's a 37% less ETH on exchanges. A constant decline in supply on exchanges is considered a bullish sign, as there's less ETH available to trade or sell. There was a total of 19.12 million ETH worth $31.3 billion on exchanges in September before the merge. The number has now declined to 13.36 million ETH worth $19.7 billion in the second week of February. I read this article completely wrong. I thought that there was, after the CPI numbers, there was some big 37% plunge on a specific exchange. I'm a moron. This is saying just overall. Got it, because ETH is now deflationary. Moving on. A major chunk of ETH supply is being moved into self-custody, while many traders also prefer staking. That's what I'm talking about. With the Shanghai upgrade just around the corner, Shanghai Ethereum's upcoming update is scheduled for March. The Shanghai hard fork will integrate more improvement proposals for network enhancements and allow stakers and validators to withdraw their holdings from the beacon chain. Currently, 16 million ETH, or 14% of total supply, is staked on the beacon chain, amounting to approximately 25 billion at current prices. Not after today's pump. A sizable amount that will gradually become liquid after the Shanghai hard fork. Apart from constant decline in ETH supply held on exchanges, ETH's overall market supply has also declined since it turned deflationary. And this is what I was saying post-London upgrade. The deflationary model comes from a fee-burning mechanism introduced through Ethereum's improvement proposal, EIP 1559. A total of 2.9 million ETH has been burned since the London upgrade in August of 2021, estimated to be worth 14.5 billion in today's value. With that being said, guys, I'm gonna add my little opinion piece to this. There's a lot of people that are, and look, I've never really, even in 2017, I wasn't really like a huge ETH fan. I wasn't. I didn't buy a lot of ETH. I used it to buy and make transfers, but I didn't hold a lot of ETH. With this new upgrade, there is an argument that the tokenomics of ETH are now better than Bitcoin, and I have to agree with that. It is now deflationary. It is insanely deflationary, even in our bear market that we're in right now. With that being said, when we go into full bull mode again, it's going to become even more deflationary, which begs the question, does that mean the price will go up higher? I mean, basic tokenomics will tell you it will, just because of the scarcity. It's as simple as that. So I got to admit, I'm in the camp right now that if you're looking for a strong risk to reward bet out there, a strong risk reward ratio in a token, in a crypto, ETH is looking really good, guys. There's people calling for 10. I gotta be honest, at the top of the next bull, me personally, and again, this is not financial advice, I'm not a financial advisor. Do your own due diligence, do your own research. Crypto is volatile, but me personally, I see people that are calling conservatively for a $10,000 ETH at the top of the next bull cycle. I think that's super conservative. That's literally a 100% gain from the top of this last bull market. With how much, with I can't try to put my words together. With how many projects are still working on ETH that are still being built on ETH, which with how much use case there is for ETH, I think it would be hard for me to believe that ETH doesn't get past 20K in the next bull cycle. That's only a 200% gain from the top of this last one. That's not a hard ask, in my opinion. It's just not. Again, like I said, because of all the projects that are still being built on Ethereum, as well as, and this will be the last thing I say about this, guys, because I don't want to ramble. I always ramble too much. I'm sorry. I'm so sorry. The reality is that there is internet money out there, right? Everybody expected Bitcoin to be the money used for crypto, right? For transactions. It's not. It's Ethereum. We all use Ethereum to buy stuff. We use it for NFTs. We use it to transfer. It's faster. It's easier to get your hands on. It's easier to onboard and convert. It's faster than Bitcoin. And we use it as internet money. We actually use Ethereum to buy things. I forgot what it was. Someone was talking, I think it was just yesterday, about some NFT project that came out, and I forget what token it was in, and they were explaining the price, like the price listed of this NFT for its native token, and then in parentheses told you how much it was in ETH, which was hilarious because that's what I'm getting at. ETH is the money of the internet right now. So wrapping this up, ETH is looking really good for a low risk to good reward, and it's not going to run. I mean, trust me, there's going to be plenty of cryptos that will get more profit than ETH during the bull cycle. But if you're looking for a risk to reward ratio where you're super safe, not 100% safe, but very safe to risk, versus reward, ETH is looking like the play, man. All right, so enough of my rambling. I'm sorry. Let's move on. This moron. SBF and FTX fraud aided and abetted by Silvergate Bank alleges lawsuit. The filing is the latest proposed class action in a string of lawsuits aimed at Silvergate over the last 2 months about its links with Sam Bankman-Fried and defunct, why do they keep using that statement? Defunct crypto exchange FTX. FTX. Silvergate Bank and its CEO Alan Lane have been accused of aiding and abetting a multi-billion-dollar fraudulent scheme orchestrated by Sam Bankman-Fried and two of his entities, FTX and Alameda Research, in a newly proposed class action lawsuit. Interesting. The proposed class action lawsuit was filed in the United States District Court for the Northern District of California on February 14th by lawmakers representing a San Francisco-based FTX user who was frozen out of around $20,000 in crypto when the exchange collapsed last year. Plaintiff Soham Beta Badia Samsonite alleges that Silvergate Bank, its parent company Silvergate Capital Corporation, and CEO Alan Lane were aware of the use of FTX customer funds by Alameda Research and has accused them of concealing the true nature of FTX from its customers. At all relevant times, Silvergate, Bankman-Fried, and Lane were each co-conspirators of the other, according to the lawsuit. Adding, there's a tweet, talks about it, shows the map, I guess. The lawsuit alleges Silvergate and Lane aided and abetted, encouraged, and substantially assisted Bankman-Fried in jointly perpetrating a fraudulent scheme upon plaintiff and the class. By aiding, abetting, encouraging, and substantially assisting the wrongful acts, omissions, and other misconduct alleged above, defendants acted with an awareness of their wrongdoing and realized that their conduct would substantially aid the accomplishment of their illegal design. The suit seeks a combination of damages, restitution, and disgorgement of profits, with the amount to be determined in trial. However, the lawsuit is yet to be certified by the district court, which is a necessary step before it can proceed as a class action. The latest proposed lawsuit is just another class action complaint against Silvergate over the last 2 months. On December 14th, plaintiff Joey Gonzalez filed a similar class action lawsuit in the U.S. District Court for the Southern District of California, accusing Silvergate of its alleged role in furthering FTX's investment fraud by aiding and abetting the crypto exchange when it placed FTX user deposits into the bank account of Alameda. On January 10th, a class action suit was filed against Silvergate Capital Corporation in the United States District Court of Southern California, alleging that Silvergate's platform failed to detect occurrences of money laundering in amounts exceeding $425 million involving South American money launderers. Other companies have also been accused of similar wrongdoings. Last week, on February 6th, algorithmic trading firm Statistica Capital filed a putative class action lawsuit against New York-based Signature Bank, alleging it had actual knowledge of and substantially facilitated the now infamous FTX fraud. In particular, Signature knew of and permitted the commingling of FTX customer funds within its proprietary blockchain-based payments network, Signet. It wrote, Cointelegraph has reached out to Silvergate for comment, but did not receive a response at the time of publication, per usual. Just more garbage coming towards FTX and Sam. All right, let's move on. CZ in the news. Binance CEO says crypto industry will probably move to non-dollar stablecoins. It would be interesting to see what and how, but I mean, with the SEC coming down so hard on stablecoins, it's not a far-fetched idea, in my opinion. CZ, also known, Changpeng Zhao, also known as CZ, says that the industry may start to use stablecoins pegged to the euro, yen, or Singapore dollar following recent altcoins actions against US dollar pegged stablecoin BUSD. The crypto industry will probably start using euro, yen, or Singapore dollar based stablecoins in the future, reducing its reliance on United States dollar based stablecoins, according to Binance CEO CZ, also known. God, I keep doing that. Again, this is what I'm talking about, guys. The US is slacking, and they're not doing it. They're so afraid of the dollar being hurt. I'm assuming that they're doing all this stuff to try and hinder stablecoins and hinder crypto, but they're gonna get left in the dust. And being an American, this is not a good feeling for me. Moving on, CZ gave a statement in a February 14th Twitter Spaces event in an answer to a question about the crypto industry using gold as a standard of value instead of US dollar. CC agreed that it makes sense to use gold. However, most people's costs are still in fiat currencies. For this reason, most people calculate their investment returns in dollars, which is why US dollar-backed stablecoins are still important. However, CZ argued that the US government recent actions against against the US dollar stablecoins will probably lead to the global crypto industry to rely on other currencies such as the euro, yen, or Singapore dollar-backed stablecoins, as he explained. I think given the current pressure and current stances taken by the regulators on the US dollar-based stablecoins, I think that, as you said, the industry will probably move away to non-US dollar-based stablecoins. As a result of this, we probably will see more euro-based and other Japanese yen, Singapore dollar-based stablecoins. So it's actually prompted us to look for more options in different places. If CZ is looking to get off USD-backed stablecoins, you gotta believe that the majority of other crypto exchanges are as well. Not a good look for the US, man. CC said the algorithmic stablecoin may also play a larger role in the crypto ecosystem going forward. However, he cautioned that algorithmic stablecoins are inherently going to have risks that fiat-backed stablecoins don't have. In CZ's view, these risks need to be disclosed transparently to users, and reserves for fiat-backed stablecoins also need to be disclosed. This way, users can very clearly decide what is going on and make up their own minds about which stablecoins they want to hold or use. CZ's statements came just a day after the SEC accused US dollar-based stablecoin BUSD of being an unregistered security under the US laws. The algorithmic stablecoin Terra USD lost its peg, which we know, to the US dollar in May, causing over $20 billion in losses to investors. Yeah, interesting. The rumor that's going around, if you're new and don't watch any other channels, is that the U.S. is making way, is trying to clear the way to make the Coinbase stablecoin basically the digital dollar. So that's why they're cracking down on all of the other stablecoins out there. So it's interesting. I don't know. Comments down below. Let me know what you think. All right, moving on. Last but not least, U.S. lawmakers and experts debate SEC's role in crypto regulation. Senator Tim Scott questioned whether the Securities and Exchange Commission had been asleep at the wheel amid major bankruptcies in crypto space, causing the loss of millions in user funds. The United States Securities and Exchange Commission and its chair, Gary Gensler, were the targets of many lawmakers and witnesses at a hearing exploring the crash of the crypto market. In February 14th hearing at the Senate Banking Committee titled Crypto Crash, Why Financial System Safeguards Are Needed for Digital Assets, ranking members Tim Scott said Gensler should appear before Congress before September to address additional enforcement actions in the crypto space, calling out the SEC chair for doing rounds on the morning talk shows rather than testifying. Yeah, dude's a tool bag. According to the South Carolina Senator, the SEC has not provided the slightest bit of guidance, potentially leading to the lack of investor protection and bankrupt firms, including FTX, Terra, BlockFi, Voyager, and Celsius. To think the SEC has failed to take any meaningful preemptive action to ensure this type of catastrophic failure does not happen again, said Scott. If they have the tools they need, were they just asleep at the wheel? We'd be happy to have Chairman Gensler testify sooner, much sooner than later. Witnesses testifying at the hearing proposed different approaches for lawmakers seeking to regulate crypto. Duke Financial Economic Center Policy Director Lee Reiners suggested Congress pursue legislation to carve out cryptocurrency from the Commodity Futures Trading Commission's authority and label it as a security under the SEC, blah, blah, blah. Crypto Council for Innovation Chief Global Regulator Officer and General Counsel Linda Zhang testified that the lack of consistent federal regulatory framework on crypto contributed to a lack of investor protection and uncertainty among firms, saying the SEC has not initiated any formal rulemaking process to update securities laws that are decades old to account for the unique attributes of digital assets that are determined to be securities. I agree. I don't think these are securities. They're not. They're commodities. But again, they haven't put out any type of actual regulation, any type of actual transparent regulation. They're using, like this person said, old antiquated laws and regulations based off of something that crypto is not. And they're kind of just trying to regulate by force. They're just blanketing everything right now and saying, oh, it's a security, so we're going to take you to court and we're going to hope that the evidence proves that it's a security, as opposed to telling us how it's a security. You guys get my point. Anyway, Vanderbilt University law professor Yisha Yadav echoed some of Zhang's concerns on developing a federal framework for crypto, but also proposed a self-regulatory regime in which exchanges could oversee themselves as a complement to public regulation. Firms that failed to comply with these rules could be forced to pay financial penalties. In the United States, there is seemingly a regulatory tug-of-war between many government agencies looking to establish rules on crypto companies. Gensler's claimed most token projects qualify as securities under the SEC guidelines and repeatedly called on firms to come in and talk to us so we can sue you and take money from you. Freaking tool bag. The agency has already taken enforcement actions against Kraken and Paxos in 2023. Yeah, just more BS. These guys, it's a money grab. That's what it looks like to me. Besides all the other weird back-end stuff that they're trying to do, like I said, to try and make the Coinbase stablecoin, the U.S. Digital currency. To me, this looks like just a money grab from Congress. They're going to all these exchanges and they're hitting them with like BS fines, like $4 million, $12 million. And these are exchanges. They know they can afford it, so they're just going to settle out of court. Yeah, that's my opinion on it. Let me know what you guys think down in the comments down below. Are you for crypto regulation? Are you against it? Do you have ideas for crypto regulation? Again, comments down below. Outside of that, let's take one more look at Bitcoin. Yeah, we're pulling back a little bit before we get out of here. Let's look at the 1 hour. Let's go to the 15. We'd have a mini bounce off of this line on the 15. What's the 30 look? All right, so 30 just started. Well, it's halfway into it. But we're looking like we're getting a bounce on the 30 minutes. Keep your guys' eye on the 1 hour and the 4 hour to see if we hold this level of 22,738. Flip this bad boy back into support, and we're off to the races again. Yeah, that's it. Aside of that, guys, per usual, if you do enjoy the content I provide here on Boring Crypto IO, please subscribe to the channel. Turn on the little bell for notifications so you know when I post a video every morning. Watch and like the videos. And I will see you guys again. Oh, wait. I'm not seeing you guys tomorrow. I have some medical stuff I've got to take care of tomorrow. So, unfortunately, there will not be a video Thursday. Depending on how I feel, Friday, I will do my best to get a video out to you guys. If I don't, I will see you guys bright and early Monday morning. If I do, I will see you guys bright and early Friday. Yeah. Enjoy your day, guys. I'm out of here.